MiFID II takes into account the changes in technology and market structure and so on. How will this transform the equities markets in the future, and do you feel there are echoes between that and what may happen now on the settlement side?
Well, there's two questions in there. I'll try and answer the first one. I don't think MiFID II will transform the equity markets. I think MiFID I was much more transformational in terms of the way it opened up the competitive dynamics. A lot of what I see MiFID II is trying to do is to address some of the issues and some of the consequences of that competition and fragmentation that opened up, and try to put back and address some of the elements that came out of MiFID I that were probably seen as less desirable, but were a consequence to that opening up and to that competition. So that's issues around transparency, which we heard about today, and the various different elements and of venues around that space. And again, talking a little bit, I think, as Emil Pallas was talking from the Commission, about trying to address the primacy of the lit market structure. It's a little bit about the fragmentation and of information and issues like the consolidated tape. So I see very much MiFID II as being a movement of addressing some of the issues of MiFID I rather than being a transformational change in its own right. The second question is very interesting, obviously, and part of really why we're all here today in a way, because clearly in the post-trade space there was never a MiFID I. EMIR and now CSDR, between them along with the combination of T2S, is going to transform this space as well. And there's this careful balance, I think, that the Commission is trying to draw and other actors are trying to draw between opening up that competitive environment as well. But clearly within this space there's a lot of issues around risk, lots of issues around financial stability, a lot of issues around stability. And so there's a sort of balance there to be managed, which I think the Commission and other parts are very cognizant of, and cognizant of therefore the potential fragmentation issues that occurred in the equity trading, and not to replicate those potential issues within the context of this post-trading. So I do see it as quite a significant shift. I do think we're trying to move into a more harmonized post-trading world with a competitive dynamic that should ultimately lead to some of the benefits, say, that MiFID I has happened in terms of the equity trading space. But I think they're also trying to sort of learn some of the issues that MiFID I created in the equity trading space and ensure that those kind of issues don't occur within the context of the post-trading space.
There does need to be more work on transparency, there doesn't there? Because there are problems. There is a sort of silo system that meant that, for instance, collateral gets stuck in places and isn't as available to move around as it should. New rules are coming in to change that anyway. It's going to be a very different world 5 years from now, isn't it?
Yes, I do think so. I mean, I think the world of the general shift of OTC trading within all, from the G20 commitments onwards, is significantly moving the activity of the financial markets into a more formalized space, to varying degrees, of course, and it probably won't all move to the extent, say, the equity market structures are, but whether it's the fixed income markets, the derivative markets, we are seeing a significant change within this whole space that we're really only just at the beginning of. I mean, I think the regulatory impacts are yet to be fully felt all the way through the system. This is coupled with, obviously, the parallel impacts that are going on in CRD4 and Basel III with the actual actors themselves. So you've got two major forces impacting both the actors and then the way and the manner of which they act within the financial space, that I think in 5 years' time we'll look back and see a very, very different world from the world we currently have. And we're already seeing the signs of that. We're already seeing a huge amount of the OTC derivative space already cleared. But I think when you overlay all the impacts of Dodd-Frank in the US and EMIR and MiFID and CSDR and all the things we've been discussing today, we will see a very, very different world at the end of it.
A safer world for investors?
One would hope so. That's clearly part of the intention. Part of it's about financial stability. Part of it's about continuity of markets. I think, again, one of the key lessons of the crisis and almost why there is this trend towards infrastructure has been a recognition that continuity of markets is actually a good thing. And actually, I don't think we should ever forget this. The infrastructure performed well through the crisis, and in some sense why there is this push towards greater usage of the infrastructure lies in the fact that actually the infrastructure did pretty well through the crisis, and we shouldn't lose sight of that.